Good morning, good afternoon, good evening, depending on where you're connecting from. Confirm you can hear me loud and clear. Confirm you can hear me loud. Can you all hear me? Can you all hear me? MTN network should do well. Can you all hear me? 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 If you can hear me, drop a comment. So like I said, today I will be teaching on candlestick patterns. I'll be teaching on candlestick patterns. We'll be looking at the just three candlestick patterns for today's class. And I think these three candlestick patterns are the best amongst all the other candlestick patterns that we have. Okay, we have up to close to 56 or close to 60 candlestick patterns. But these three, I think, is the best amongst all the patterns. Okay, you can make consistent profits in the market if you stick to trading with these patterns, stick to identify these patterns and executing trades, using these patterns. Okay, so you're welcome, you're welcome, you're welcome. If you have any question, let me know in the comment section. Trading analysis shouldn't be complicated. It shouldn't be complicated. You don't have to be an ICT trader. You don't have to be an Elliott wave trader. You don't have to be a GAN analyst. Just learn how to read the candles. Don't complicate trading for yourself. Learn how to identify candlestick patterns. That is all you need. That is all you need to make profits consistently in the market. Okay. So let's look at the three candlestick patterns. And the three candlestick patterns are shooting star, hammer, and engulfing pattern. Shooting star, hammer, and engulfing pattern. These are the three candlestick pattern you should focus on. Okay. I believe you all can hear me. I believe you can hear me. Shooting star. Shooting star. Hammer and engulfing pattern. Just these three candlestick is all you need to make profit consistently in the market. Okay. So shooting star, what does a shooting star candlestick pattern indicate? When a shooting star candlestick pattern forms on the chart, what does it indicate? And what does a shooting star pattern looks like? Okay, let me show you on the chart. This is what a shooting star candlestick pattern looks like. Okay. Okay, so shooting star. Let me look for a shooting star candle. I hope you guys can hear me clearly. You can hear me clearly. Okay, a shooting star candle. This is what a shooting star candle looks like. This is what a shooting star candle looks like. Okay, this is what a shooting star candle looks like. Now, a valid shooting star is not supposed to have a wick below it. A valid shooting star is not supposed to have a wick below it. But these days, it is very difficult to find a candle without a wick above it or below it. It is very difficult. Okay, it is very difficult. So for this to be qualified to be a shooting star, the wick above it, okay, for the pattern to be qualified to be called a shooting star, the wick above it must be 2 times the body. The wick above it must be 2 times the body. So this is what a shooting star pattern looks like. And the shooting star candle forms in an upward trend. As you can see, the preceding trend before the formation of this pattern was bullish. You can see it was bullish. So the formation of the shooting star pattern indicates that the bulls are becoming exhausted. Okay, the bulls are becoming exhausted, and there's a high probability for price to retrace. There's a high probability for the trend to change because the buyers are becoming weaker. It means the bullish momentum is has become weak. It means the bullish momentum has become weak. So for that reason, there is a high probability for price to drop. Those who caught this move, this buy from this point, most of them would want to sell. They would have made profit at this point. They made profit at this point. Some persons sold at this point, while others sold at this point. Because those who bought from this point made profit, they closed their trade, and that's the reason for this reversal before it continued with its bullish move. And at this point, we had more traders willing to sell from that area. You can see. So when you see a shooting star, anytime you see a shooting star form in an upward trend, you should look for opportunity to sell. This is not difficult. This is not difficult. The reason you can't identify this pattern on the chart is because you don't spend time on the chart. That's the reason you're finding it difficult. You're always waiting for someone to point at shooting star, to point at a candlestick pattern. Is because you don't spend time on the chart. You don't spend time on the chart. That is why you are finding it difficult. It is not difficult to find these things on the chart if you spend time on the chart, if you spend time to do back testing, it is not difficult to identify these patterns. Okay, so this is what a shooting star looks like. Let me look for another example of a shooting star and we'll see how the market reacted. Okay, so you can see this. This is also a shooting star. You can see this. This is also a shooting star. Can you see that? The wick above it is what? 2 times the body. This is a shooting star. And if you had executed a trade based on this pattern, you would have made a profit on this trade. This is like 1 to 2 risk reward, because if you had executed sell from this point, yeah, okay, this is the closing price, your stop loss would be at this level. This is about 44 pips. And if you are risking 44 pips, you should go for at least 80 pips. 80 pips. So let's see if it delivered 80 pips. You can see it did over 100 and something pips. It did over 100 and what? Something pips. You can see that. So this is what a shooting star candlestick pattern looks like. Let me look for 1 or 2 more examples before we move to the next candlestick pattern. If you have any question or any pair you want me to analyze, let me know in the comment section. Okay, let me know in the comment section if there's any pair you want me to analyze. We're going to look at the charts very soon. You can see this. This is a valid example of a shooting star. Is it difficult to identify this pattern? No, but you don't want to spend time to study. You don't want to spend time to backtest. That is why you are struggling to identify this pattern on the chart. This is a shooting star. This is a shooting star. After the formation of this shooting star, sell. You see the profit you would have made on this trade. Can you see? After the formation of the shooting star, you do what? Sell. Shooting star candle forms in an upward trend. Shooting star candle forms in an upward trend. Okay, so let's look for more examples. This is also a shooting star. This is also a shooting star. You can see the wick above it is 2 times the body. The wick above it is 2 times the body. You can see. And after the formation of that pattern, what happened? It sold. It sold after the formation of that pattern. We also had a shooting star here. The wick above this is 2 times the body. What happened after the formation of this shooting star? It sold. It sold. You can see that. One more example before we move to the next candlestick pattern. Don't complicate analysis. Don't complicate trading for yourself. Don't complicate trading for yourself. I've learned several strategies, but I can tell you that candlestick pattern still remains the best. Candlestick pattern. Most of all the strategies out there use candlestick pattern. They use candlestick pattern. So sit down and master. Take your time to master candlestick pattern. How to identify this pattern. Okay, so let's look for other. Let's see one more example. One more example. Can you see this? Can you see this? This is a shooting star. Can you see a shooting star? And after the formation of the shooting star candle, what happened? Price sold massively. Price sold massively. Okay, so that is it for shooting star. Okay, the next candlestick pattern I want to talk about is hammer. So the shooting star is a bearish reversal pattern. It's a bearish reversal pattern. The hammer is a bullish reversal pattern. Bullish reversal bullish reversal, bullish reversal pattern. Okay, engulfing is both bullish. We have bullish and bearish reversal. Okay, so let's look hammer. Now, an hammer forms in a downward trend. Hammer pattern or hammer candle forms in a downward trend. When an hammer forms in a downward trend, you look for opportunity to buy. Okay, you look for opportunity to buy. When an hammer forms in a downward trend, it indicates that the bearish momentum has decreased. It indicates that the bearish momentum has decreased and there is a high probability that price will go up from there. The bearish momentum is decreasing and the bullish momentum is increasing. That's what it means when an hammer forms in a downward trend. It means the sellers or the bears are becoming weaker, they are becoming exhausted. So at that point, you should be looking for opportunity to buy. So what does an hammer looks like? I can see one very clearly on my screen right now. You can see this. This pattern, this pattern, this pattern, it's a bullish reversal pattern. This is an hammer. Once you see this hammer form, you should look for buy. It's very simple. When this hammer forms in a strong bearish move like this, after this aggressive sell, you should buy. But what do most retail traders do? When they see this candle, most will keep selling. Most will keep selling because they've seen this aggressive sell. This is where they want to join to sell. Why this pattern is indicating that the bearish momentum has decreased and the bullish momentum has started increasing. That is when you should buy. That is when you should buy. That's a good question, Mr. Kola. I would respond to that. Okay, the color of the candle matters also. The color of the body of the candle matters. I will address that. I would address that. So this is an hammer. Let me look for another valid example of an hammer. Good, 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 good. Let's see. Okay, so we also had an hammer here. You can see this. We also had an hammer here. Why is this an hammer? Now, a valid hammer is not supposed to have a wick above it, but like I said, it's very difficult to find a candle without a wick above it and below it this time. So you can see that the wick below it is 2 times the body. That is why it is called an hammer. The wick below should be at least 2 times the body for it to be called an hammer. This is also an hammer. The wick below it is 2 times the body. So if you had missed the opportunity buying from this point, you had another opportunity to buy from this point. You can see. So that is what an hammer looks like. I'm so excited because right now GBP USD is paying me. GBP USD is paying me. I'm so happy right now. I'm so happy. You can see bearish premium, bearish premium. If you have this software and you didn't take this trade on GU, oh, if you didn't take this trade on GU, I've been telling you since on Monday, wait for a bearish, for this bias to change to bearish before you sell. Since on Monday, I've been saying it. Once this changes to bearish, start selling, start selling. Since on Monday. So if you didn't take this trade, you didn't take this trade. Oh, no, 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 no. let's go back to let's go back to 4 hour. I've been selling GU. It was yesterday. Yeah, yesterday. Started selling GU. Massive profit right now. Massive profits. Massive profits. Okay, so candlestick pattern hammer. Let's go back to what we hammer. Okay, so this is an example of an hammer. Let's look for more example. Let's look for more example hammer. Please spend time to back test, go back and see how the market has reacted to these patterns. That is how you become a very good trader. That is how you become a very good trader, a very good analyst. Okay, you can see also here, this is an hammer. And after the formation of the hammer, price went up. If you had executed buy after the formation of this hammer, let's see, you bought from this point, stop loss here. This is about just 25 pips, 25 go for 50 pips. Okay, you didn't get to 50, but at least it delivered 44 pips. 44 pips. So on this trade, you shouldn't lose. At least worst case scenario will be break even. Worst case will be break even. Okay, so let's look for more example. Hammer. Here is hammer. One more, two more examples. So you can see here also we had an hammer. This is a valid hammer. You can see this hammer. This hammer does not have a wick. It does not have a wick above it. This is a valid hammer candle. This is a valid hammer candle. This is a valid hammer candle. One more example, then I will attend to Mr. Akola's question on one more example. This is also an hammer candle. This is an hammer. You can see this is an hammer candle. Okay, this is also an hammer candle. You can see after the formation of the hammer, what happened? Price went up. You can see price went up. Also at this point, after the formation of the hammer candle, what happened? Price went up. Simple. Simple. This is another valid one. You can see this. You can see this. This is another valid hammer candle. This is a valid hammer candle. Okay, if you are a patient trader, candlestick pattern will make you good money. If you are a patient trader, candlestick pattern will make you money. Okay, candlestick pattern will make you money. You just have to be patient for those patterns to form. Sometimes it takes time for these patterns to form. You just have to be patient. If you are not a patient trader, you can't make money in Forex. You can't make money in Forex. If you are not patient, you can't make money in Forex. See, this is a shooting star, shooting star. One more example for Arma, then we okay. Okay, I think the wick here is this. This is an Arma. This is an Arma. We can also call this engulfing. I'm going to talk about engulfing. That will be the last candlestick pattern for this session. The patterns I'm sharing with you is the three patterns are the best. Are the best. If you know how to identify these patterns, you don't need to learn any other pattern. Don't stress yourself learning other candlestick pattern. Just this three candlestick pattern, you make good profit in Forex. So you can see this is also an hammer. You can see this is also an hammer. This is also an hammer. Hammer. This is also an hammer. Okay. So you would have bought here, you would have made so much profit. But sometimes these patterns would fail. Okay. Sometimes these patterns will fail because what we're doing here is technical analysis. So for example, after the formation of this pattern, after the close of this candle, if a major news is released for GBP USD, or let's say a news was released for US dollar, and the news is what is an high impact news and it was positive for the dollar, price could break out from this low. Price could just keep selling because the news that was released favored the dollar. It was positive for the dollar. So there's also possibility for price to break the low of that candle. And that's why when you are taking this trade, you set your stop loss using the low of that candle. Your stop loss should be the low. That is your invalidation level. You must have that before you execute the trade. Invalidation level. When price drops to this level, I'm going to exit my trade. Don't fight the market. Flow with the market. The market is always right. Okay. The market is always right. Don't fight the market. So if it fails, wait for the next opportunity. Don't revenge. Wait for the next opportunity. Keep fighting with the market, you keep blowing your account. Don't fight the market. Okay. Don't fight the market. Okay. So One more example, then we'll look at before market analysis for today. So the market has already moved. The market has already moved. If you have not taken a trade on today or yesterday, I don't think there are opportunities unless you want to take a very high risk. Yes, okay, so this is another valid hammer. This is another valid hammer. So after the formation of this hammer, execute your trade and you would have made good profit here. Okay, so that's it for hammer. Then the last one is engulfing. Okay, engulfing pattern. Like I said, we have bullish engulfing, okay, which is a bullish reversal pattern, and we have bearish engulfing, which is a bearish reversal pattern. We have bullish engulfing and we have a bearish engulfing, and I can see one very clearly on the chart right now. This is what an engulfing pattern looks like. Why is it called an engulfing pattern? The bullish candle that formed after the previous bearish candlestick is what? It closed above the high and the open of this previous candle. That is why it is called engulfing candle, engulfing pattern. This is the engulfing candle. Then both candles combined is the pattern, engulfing pattern. And anytime you see this bullish engulfing pattern form on the chart, you should be looking for buy opportunity, buy opportunity, buy. Okay, so this is a bullish. The opposite will be a bearish engulfing pattern. When a bearish candle engulfs a bullish candle, that will be a bearish engulfing, and that forms in an upward trend. The bearish engulfing pattern forms in an upward trend. Bullish engulfing pattern forms in a downward trend. It's that simple. So once this candle engulfs the previous bearish candle, what does this tell you? This tells you that the buyers have overpowered the sellers. That's what it means. They have engulfed the sellers. That's what it means. So you start buying, buy, make good money. Okay, let's look for more example of engulfing. This is also engulfing. This is engulfing. Can you see this? This is a bearish engulfing. This is bearish engulfing. You can see this bearish candle engulfed this bullish candle. Not only did it engulf just this candle, it engulfed this also. It closed below the low of this candle. You can see engulf. This is a strong engulfing pattern. Strong engulfing pattern. You start selling. See how much you would have made. See how much you would have made. Just flow with the trend. Most of you, once you've seen profit of 20 pips or 30 pips, you close your trade. But you see how much you left on the table. If you had executed sell here, if you had executed sell here, your stop loss will be at this point. This is about 50 pips. And your take profit should be at least 100 pips. You can see at this point, you would have made over 100 pips. Your target should be 100 pips. But most of you, once price moves in this direction and you see this little reversal, you close the trade. You see this little reversal, you close the trade. Let the trade run, let it run. It's either TP, stop loss, or break even. Don't interfere with the trade. Don't interfere with the trade. Your risk determines your reward. This is where you have to set your stop loss. So if the risk here is 45 or 50 Ps, multiply it by 2. That should be your reward. It's that the market gives you your TP or you break even. You break even. You see this engulfing also. This is a strong engulfing, a valid engulfing pattern. You can see it. Strong engulfing pattern. Strong engulfing pattern. Okay. You see how much you would have made if you had caught this move. But most of you executed. Let's see the risk here. The risk here is about one. This is where you have to set your stop loss. You can't set your stop loss anywhere below or above this. This is where you're supposed to set your stop loss. It's the market that tells you where you should set your stop loss. You don't determine where to set your stop loss. This is where you set your stop loss. If the risk is too high for you, then that trade is not for you. That setup is not for you. If you think the risk is too high for you, then you shouldn't take the trade. That means that trade is not for you. Okay, so 144 pips. My TP is 144 times 2. 144 times 2. That's about 288 pips. Let's see. 288 pips. Did it deliver it? Yes, it delivered it. But it took days. It took days, but it delivered 288 pips. So you have to patiently wait for that to play out. Instead of looking for sell, you bought today, tomorrow you are looking for sell. Look at the sells. The trend was bullish, but look at the sells. Very weak sells. The reversals here were very weak. So if you are selling, most of the profits you make buying, you will give it back to the market selling. Just identify the trend for the week or the trend for the day and follow the trend until it changes. How do you know the trend has changed? You look for bearish reversal pattern. That's when you know the trend has changed. Bearish reversal pattern. The same strategy you use in entering a trade is the same strategy you should use in exiting a trade. If you know how to enter a trade, you shouldn't have an issue with knowing when to exit a trade. You shouldn't have an issue with that. Okay, so another example of engulfing. This is also an engulfing. This is also an engulfing pattern. Can you see? This is also an engulfing pattern. And what happened? Price went up. Price went up. Okay, so that is it for bullish and bearish engulfing pattern. This is also an engulfing pattern. This is also an engulfing pattern. So if you are executed by here, stop loss 56, and your take profit 56 times 2, that should be 112. 112, the market went in your direction, just did 31 pips, and it reversed. And after this reversal, a lot of people will panic and exit the trade. But what happened after you've exited the trade? The market started going in your direction, and that is when you want to revenge trading. That is when you want to revenge trading. Once you've executed the trade, let it play out. Let it play out. So if your risk is 56 pips, wait for the market to go in your direction, 56 pips, adjust your stop loss to your entry level. If price pulls back, you will not lose on that trade. You will not lose on that trade. But what do most people do? Most new traders, because the market has moved in your direction 37 pips, you want to be smart. You adjust your stop loss to break even. And what happened? When price reversed, what happened? You will be taken out. And after the market has cleared you, has kicked you out of the market, it starts going in your direction. It starts going in your direction. When you want to trade your stop loss should determine your trailing value. Your stop loss should determine your trailing value. So for example, if the risk on this trade is 54 pips, your trailing stop should also be 54 pips. It means that before you adjust your stop loss to break even, the market must go in your direction 54 pips at least, not 20 pips, not 30 pips. It has to go in your direction 50 pips before you think about adjusting your stop loss to your entry level. It's simple. It's simple. Then we have another engulfing here, a very strong engulfing pattern. And after the engulfing pattern, what happened? Massive sell. You can see massive sell, massive sell. Most would have entered sell from this point. Stop loss, let's say stop loss at this point is about 101 pips. 101 pips times 2, we are going for 200 pips. Let's say 200 pips. Did it deliver 200 pips? At this point, it was 171, but it kept going bearish. It delivered the 200 pips. But most people, once price goes down and there's a little retracement, this reversal, most traders would panic and close that trade. And immediately you close that trade, price starts going in that direction, and you want to jump in. You want to jump in again. You want to do revenge trading. Okay, so that's it. Any question? Any question? Any question? So that's it for engulfing. We also had this engulfing here. You can see the engulfing pattern here, and price went up, bullish. We also had an engulfing pattern here, bearish engulfing. What happened? It sold. We had an engulfing pattern here. We had an engulfing pattern here. It sold. Spend time on the charts. Do back testing. The more time you spend on the charts, the more easier it becomes for you to be able to identify this pattern. Okay, so that will be it. Man, GBP USD is paying me well. It's paying me well. EU also, I think the EU is about to start the move. You can see the signal bearish. Our signal for today is bearish. I think EU is about to start its own move. But I think GU is ahead of EU. GU is ahead of EU. So that will be it on candlestick pattern. You can see the engulfing pattern here. You can see the engulfing pattern on euro, and after that engulfing pattern, you can see what happened to price. Price went up. You can see this engulfing pattern. So that will be all. If you have any question on candlestick pattern, let me know. So we're about to start market analysis for the day. Any question? So irrespective of the color in shooting star. Now, if the shooting star if the body of a shooting star is bullish, if the body of a shooting star is bullish, you are advised to wait for the next candle to close bearish. Okay? If the shooting star is bullish, you are advised to wait for the next candle to close bearish. Just like we have it here. It's bullish. The body is bullish. This tells you that we still have few buyers in the market, and these few buyers can keep pushing the price up. So you want to be sure that we have enough sellers in the market to push price down. You want to be sure the bearish momentum has increased for you to sell. That's why you're advised to wait for the next candle to close bearish before you sell. But if the body is bearish, you don't have to wait for the next candle, just as we have it here. You don't have to wait for the next candle to close bearish. But after the formation of this bearish shooting star, did price pull back? There was a pullback. There was a pullback. That you don't have any business with pullback. You don't know what will happen next when you see a pattern. You don't know what will happen next. Your role is to execute the trade after the candlestick pattern forms. Your role is to execute the trade. You don't know what will happen next. No one knows what will happen next. No one knows what will happen next. You could have this valid shooting star, and after this shooting star forms, President Trump gives a speech, or one of the governors of the central banks gives a speech. What will happen? And if the speech favors, or if it is negative for the dollar, in the case of GBP USD, if the news is negative for the dollar, dollar will lose value. What does that mean? We expect price to go up. If anyone knows or is so certain that the market will go in a certain direction, then we don't have to be using stop loss. We don't have to be using stop loss. We don't have to be using stop loss. Nobody knows. Nobody knows. You could have a valid setup, and that setup can still go against you. That's the market for you. It can go against you. So to protect yourself, to preserve your capital, you apply your stop loss. You apply your stop loss. Okay. So this is example. Let me see bullish. Let me look for one more example too. Okay, this one is bearish. Okay, so you can see what we have here. Before this bearish shooting star, we had a bullish shooting star. You can see that we had a bullish shooting star. Now, after the formation of the bullish shooting star, advise wait for the next candle. So it is after the close of this bearish shooting star, that is when you will sell. You can see what they did here. They intentionally swept the liquidity residing at this high. It was intentional because after this bullish pattern, this bullish shooting star, most retail traders will not patiently wait for the next candle to close. Most retail traders will not wait. And what did they do? And you can even look at the time. The timing also is very important. You can see the time this formed. This was in Asian session. This was in Asian session. So the normal retail traders have executed sell after the formation of this candle in Asian session. And what did they do in London? They had to first of all come and sweep the liquidity residing all your stop losses that you set here and few pips above this level. That was what they swept before they sell. So you can see this also. We had a shooting star. We had a shooting star. Okay, we had a shooting star here, and you can see the next candlestick close bearish. The next candlestick close bearish. So you do not execute a sell after the formation of this bullish shooting star. You wait for the next candle to close bearish before you take a sell. I hope that is clear. In the case of hammer, if the body of the hammer is bullish, you don't have to wait for the next candle to close. You don't have to wait. But if the hammer, just like we have it here, good. This is a valid example of what I want to explain. You can see we had an hammer here. We had an hammer here, but the body is bearish. The body is bearish, and the next candle close bearish. It means you don't sell after the formation of, you don't buy After the formation of this AMA, you don't buy. After the formation of this AMA, you have to wait for what? This next candle to close. This next candle, this is the bullish candle. You have to wait for it to close before it buy. Now you can see this pattern, this bullish candle formed in Asian session. It formed in Asian session, right? So you would have bought for here. But in London, what happened in London and New York? You can see that they push price back again. They push price back to this level before going up. You can see the normal retail traders that have executed buy in Asian session, and their stop losses will be residing at this low. You can see that is the reason for this sell. Your stop loss that you set here is the reason for this sell. Even some will set their stop loss here. And in Asian session, most times the spread is very high. So if the spread is high, if you set your stop loss here too, they would have taken you out because of the high spread. They would have taken you out here. Even at this point, they would have taken spread would have made them sweep liquidity residing at all these lows. That was what happened in London session before the price started going up. I hope I've answered your question, Mr. Kola. I hope I've answered the question. Now, what time frame is suitable for this pattern? From 4 hour above. From 4 hour above, that is the time frame you should identify these patterns. From 4 hour above, 4 hour, 4 hour. Okay, 4 hour. That is the time frame you should identify this pattern. 4 hour, daily, weekly. If you're a day trader, you should identify this pattern on 4 hour time frame. If you're a swing trader, identify the pattern on a daily time frame. If you're a position trader, identify the pattern on the weekly and the monthly time frame. Weekly and monthly time frame for position trader, day traders, 4 hour time frame, swing trader is daily time frame. For scalper, I have no idea what time frame to trade with. For scalpers, I'm not a scalper, so I can't teach you what time frame to use on scalping. I am not a scalper. I'm a day trader and a swing trader. Day swing, I don't scalp. I don't scalp, so I can't teach you how to scalp. I can't teach you how to scalp. Okay, is that clear? 4 hour, daily, and weekly. So that will be it for on candlestick pattern. So let's look at the charts. We've spent so much time, on candlestick pattern. So let's look at the charts. Let's start by looking at dollar index. As you can see, I told you guys dollar. I'm expecting dollar to come fill this gap, and also first level will be this fair value gap here. That's my expectation. I shared this with you guys on Monday, Tuesday, Wednesday. I've remained bullish on the dollar, and it is still bullish. It is still bullish unless a major news is released and it's negative for the dollar, then dollar can sell. Because if you look at the chart, also we still have this sell buy side imbalance, sell side inefficiency. Okay, this is BC. It's just a fair value gap. Okay, fair value gap. Okay, fair value gap can also be referred to as buy side imbalance, sell side inefficiency. Okay, so it's a fair value gap. So we still have this fair value gap that has not been filled. So it's also possible for dollar to come and fill this gap. So it's either dollar goes this way or it comes back to fill this fair value gap before it continues with its buys. The fundamentals will determine, but technically, dollar is bullish right now. Technically, dollar is bullish right now. Okay, the only thing that will change this trend will be fundamentals. That is, if the news comes out negative for the dollar, that is when we'll see sell on the dollar. Yen. I'm not interested in trading the yen. I've already made so much profit on yen this week, so I'm not interested in trading yen. I've made massive profits, and the reason I'm not interested in trading yen this week is from today is that 1 yen it has come to a discount area, but like I told you guys, it's likely going to come and sweep this liquidity, this low here. It is coming for this low. It is coming for this low. So it has done a reversal this morning. So it is still bearish. If I'm going to take any risk on yen, it will be sell. That means I'll be looking for buy opportunity on JPY pairs. I'll be looking for buy opportunity on JPY pairs. If I'm going to take any risk on yen today or tomorrow, it will be a sell on yen. It means I'll be buying JPY pairs. I hope that is clear. So yen is still bearish. It's still bearish. I would only change my bias if the daily candle closes as a bullish reversal pattern. If the pattern that forms on a daily time frame, that is after the close of today, is a bullish reversal pattern, that is when I would expect price to reverse to maybe this fair value gap that has created here, or price should pull back to a premium area. So I'm going to apply my Fibonacci, assuming this candle has closed for the day. So this will be my swing low. Okay, this will be my swing low, and this will be my swing high. So I would like to see price pull back to at least equilibrium before making a decision to continue with the sell on yen basket. I hope that is clear. If you have any question on candlestick pattern that I just shared with you, please let me know in the comment section. Let me know in the comment section. So that's it for yen. So let's go to the sorry for that break. It was due to poor network. I believe you can hear me. The network is not stable. The network is not stable. I want to believe you can hear me. I don't know what's wrong with MTN network. But 24 hours now. It's still failing. Can you hear me? 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 Can you hear me now? Can you hear me now? Can you hear me now? Can you see my screen? Can you see my screen? Can you hear me clearly? Can you hear me clearly? Can you hear me? Can you hear me now? Can you hear me? Okay, so back to the chat. So like I said, this is not the right time to sell GU. This is not the right time to sell GU. The right time to sell GU is this. This was the right time to sell GU. So if you don't have a trade on GU, please don't sell. Don't sell right now. You should have entered sell. This is about 143 pips. Wow, this is massive. Oh, massive. I caught this trade from this point. I'm a massive profit right now. Massive profit. Massive profit. Okay, same thing on Euro USD. I think Euro USD. Euro USD is still a good sell. Okay, Euro USD is still a good sell. Instead of taking a sell on GU, we should rather go for, yeah, this is just about 50 pips on EU. Okay, so instead of going bearish on GU, you should consider EU. EU is still okay. EU has not really done so much. See my screen? Can you see my screen? USJPY, buy. You can see the buyers here is buy. Keep buying until it changes to bearish. Keep buy until it changes to bearish. You have no business selling at the moment. You have no business selling at the moment. Keep buying. Though it's overbought right now. It's overbought. You should have entered the buy like several days ago, Monday, Tuesday. That's when you should have entered the buy. So buying from the current market price is very risky, but the trend is still bullish. The trend is still bullish. The trend is still bullish. So the guys last week, yeah, should be last week or this week, I said there's a high probability UJ is likely going to come, and you can see it is very close to that target. That is why I feel it is risky. 40 pips. So let's see. Let's see. Wait for a reversal. Wait for a reversal maybe to this fair value gap here. Just wait for a little reversal. And if you insist on buying right now, I would even advise you take a buy, but you should reduce risk. Okay, on this first trade, the stop loss should be here. So let's say the normal lot size you execute is on 0.1 when the risk is 50 pips. Now that the risk has increased to 70 pips, you want to reduce your risk to that should be 0.06, yeah, or 0.07, yeah, 0.07 lot size, and 71 will be $49. Okay, that will be $49. So you reduce your risk, then if price pulls back, okay, to a discount area, you take more trades. You attack. You attack. Okay, so that's my take. Do it as in buying, but like you're gonna reverse, like you're gonna reverse, wait for the reversal, but it's not best. Not best this move I'm seeing. It might not pull back. It might not pull back. The buy has been aggressive. Okay, so just going with partial entry. Don't go all in at first and wait to see if the reversal will occur. If the reversal occur, then you can take more trade. You can take more trade. So that'll be all. That'll be all. AU also, I think it has started to sell. AU is sell. Don't look for buy. You can see our buyers here is bearish. Price is at premium. We have no business selling until the buyers think it's so bullish. I think we are back now. We are back. 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 So for gold, I was on gold, and I said you can see yesterday candle closed as a spinning top, spinning top. And if you go to 4-hour time frame, we should be able to identify a bearish. You can see the bearish reversal pattern on 4-hour time frame. We had a spinning candle here. This is a spinning candle, a bearish spinning candle. Okay, some people took a buy yesterday, and I was just wondering why someone would want to buy at this point. I was just wondering why someone would want to buy at this point. I was just wondering why someone will want to buy at this. You had another day after this reversal to buy, you didn't buy. Why would you want to buy from this point? Explain to me, why would you want to buy at this point? You are buying at a premium area, which is very wrong. Very wrong. You cannot be buying at a premium area. You should look for sell opportunity at a premium area. So gold is still bearish. Gold is still bearish. It is still bearish. Price at premium. Don't 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 um don't buy gold until price changes. Price gets to a discount area. Until price gets to a discount area. Hopefully today it gets to a discount area, then you could look for buys. So wait for the zone to change to bullish before you buy. Okay, so that'll be it for today's session. I appreciate every one of you for your participation. Okay, so that'll be it for today's session. I want to believe you got value. If you haven't liked this stream, please give the video a thumbs up. And if it's your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. And if you're interested in getting this institutional engine, this ultimate signal software, send me a message on WhatsApp. You can see my WhatsApp number on the screen. You can see my WhatsApp number on the screen. Send me a message on WhatsApp. 1 month subscription goes for $30. 2 month subscription goes for $50. Okay, 1 month is 30. 2 month subscription is $50. Okay. Do have a great day. Bye for now.